Hey Jay, the CPA here. We're going to talk about year-end planning as it relates to retirement, because here's the deal. You only have till 12/31 to finish up your retirement contributions through your employer. So that would include any kind of a simple plan or a 401k plan that is being withheld from wages, or if you work for the government, that'd be a 403b plan. When you're looking at that, you've got to have the taxes withheld, the contributions withheld from wages for you to be able to actually get the deduction. There is some misconception that you are able to somehow or simple plan sometime after the year end, and that is not true, because it can only be done through your employer, meaning it only can be done through your wages. And if you have your own business and you're doing that through wages, even though it's your own practice or your own company, it still has to be done that way. It has to be done through wages, and wages end 12/31. So whatever you're going to reflect into a 401k, 403b if you're with the government, or if you're going to do anything with the simple plan, you're going to need to get that done by 12/31. Now, if you're a business owner and you've got an SEP plan, or you've got some kind of a match going on with the 401k or the simple plan, or you can also have defined benefit plans, you can have profit sharing plans, and the sharing plan that adds to the amount that you as the employer puts into the retirement plan on behalf of your employees and yourself. So with that being said, those are based on the wages that you pay. Those are based on the amount of tax-free deductions that your employees are put in. And so there's a number of things that come into play there, and the reason I'm telling you that is that that does not have to get paid in by 12/31. It does have to get paid in by the due date of your company's tax return with extensions. So if you have a situation where you're doing a company match, meaning it's not the employee that is paying that in, it's you as the employer, you have more time to actually pay the dollars. It is based on things that happen through 12/31. So if you have your own business and you're doing any kind of retirement planning, a lot of times business owners will get confused thinking, well, I can have till after 12/31 to do everything, and that is not the case. You have to walk and talk just like everybody else, meaning if you have your own business and you're an employee of it, which if you have a successful business, you're probably doing some kind of wages to yourself, not just to put money into your pocket, but it's just required. So with that being said, anything you're doing that an employee would have to do, you're going to have to do it in the exact same manner. Then anything that the employer's doing, you get to benefit from. So then you're in a situation where I really need you to focus in on, there's no difference between you and an employee just because you own the company. An employee is an employee, and you have to follow it employee. And then as an employer, you do have options of how much money you can put in. But the thing to know too is that if you have employees, you're going to have to do the exact same for them as you do for yourself. So if you put in a 5% match on yours, you got to do a 5% match on them. If you're getting into these complicated matters, you definitely need to be sitting down with your financial advisor as well as a third-party administrator, which is somebody that will make sure that you're filing all the forms that are needed, doing the testing, doing the calculations, and making sure you're not putting in too little or too much so you don't get any kind of a fine from the IRS or an additional tax, which can be steep by not doing things properly. About that in another video, but you do have the opportunity to put into an IRA until April 15th and get to deduct it in the prior year, but there's a lot of limitations to how that can come into play. All right, hey, thanks for tuning in, and as always, I would love it if you would subscribe to my YouTube channel, and then don't you ever forget, you've never met a CPA quite like me. Don't you ever forget, you've never met a CPA quite like me.